Hey guys, how are you doing? This is Yordan, and in this short video I would like to share with you a few tips on trend lines. Basically, those are the things I've noticed that many people, many of our students are having troubles with when it comes to trend line trading. So again, in this video I'll try to cover them. So the first mistake that majority of the people are actually doing in their trading when it comes to trend lines is that they're not looking for the ABCD or double wave pattern. In other words, when we're looking to sell or to buy, we need to see A, B, C, and D developing and then connecting A and C, or if there are more legs to that we're going to connect here or here on the same trend line, doesn't really matter. Okay, the idea is very simple. What people are having issues with is that they try to draw trend lines in places like this or like that, and then they're trying to buy here or sell here. And the problem with those setups is that if that would be your A and that would be your B and that would be your C, you don't have a valid D. Okay, this high of the B was never reached and broken in order to create higher highs or lower lows. So anytime you experience these situations, don't fall for the trap. Those kind of trend lines, of course they might work, but in general this is not the correct structure of a valid trend line when it comes to trending the trend lines. Right, so this is one of the first mistakes majority of the people do, and again, if by any chance that succeeds, it will be pure luck and it won't be a real trend line that you're going to trade. Now let's check out a few examples. This is the euro-dollar 30-minute chart. As you can see, we have leg number 1, correction, leg number 2, and this is where D breaks below the previous low. Right, so this is your A, B, C, and here you have D, and D is lower than B. This is where we're looking to trade the breakout. Next example shows you how the wrong counting of ABCD or the double wave looks like. Basically, again, you have A, B, C, but point D never managed to cross below the previous low. So trading this kind of breakouts is very likely going to not succeed. I chose this one on purpose because it's just better to show the positive outcomes than the negative ones. But I believe you do get the point. Now here we have another one, and this time we're looking to sell. This is your double wave. This is where point B, C, and D appear. And as you can see, we have higher highs between B and D, breakout, and we have the move lower. That's another example I chose. Of course, positive must be there again, but the idea is here to focus on the actual ABCD pattern, and this example is pretty obvious and clear that we never even reached closer to the ABCD, and the deal never broke above B. In this case, we might go ahead and say, okay, this is a triangle that we're going to trade, but then you're trading a completely different pattern, and this is not a trend line, simple trend line anymore. Okay, so that's pretty much the idea. And here we have another quick example. I chose this one on purpose. Many people have difficulties picking up the tops when it comes to this kind of situation. So basically we have a higher high previously than the one that was created afterwards, and then people don't know how to draw the trend line. Is it like this? Is it like this? And here you have a spike in between. For me, the easiest part is to pick the two most recent highs, as we have in that case, count the ABCD, check out where the breakout is and the other conditions, and then looking for the actual trade. That leads us to mistake number 2, which is not confirming with divergences. Okay, basically the lack of divergence suggests that further continuation in the ongoing direction is about to happen. What does that mean? That means that you want to see divergence, bearish one, when it comes to selling, and you want to see that divergence forming between B and D, the two highs. And vice versa, when you're looking for buys, you want to see divergence between B and D. This divergence, of course, to be bullish one, and that more or less confirms that the previous move which is developing is now about to reverse. That's a pretty simple rule once you get ahead of divergences, but it's really helpful and very, very powerful, guys. So now taking back again the examples from before, you can see here that was the first low, that was the second low, and we do have divergence in between. Looking at this double wave, which fits the ABCD, okay, you'll see that there is no divergence. And this is pretty significant because in that case, even if there was a trend line breakout, you can expect the price to actually continue higher. So extremely valuable filter if you apply divergences to your trading. Okay, and here is the other example which we showed. That's the Euro on the 1 hour chart. That's your double wave, that's your divergence on the histogram, and as you can see, the continuation is there. Now I know many of you are not familiar with divergences, and I'm suggesting to you two options. First one is VladimirRybakov.com. On our blog you can see a lot of materials, educational free materials that you can find under the educational part of the blog, of course, if you just want to test the waters and understand what divergence is about, or if you already have some idea but you would like to improve your knowledge significantly, I definitely recommend you the Ultimate Divergence course, which you can find at divergenceuniversity.com. Now that leads us to mistake number 3, and this is basically trading against the trend. Now guys, don't get me wrong, I do love trend lines and I use them as entries and I use them as dynamic supports and resistances, as levels basically. But when it comes to trading trend lines, especially on the lower time frames, do make sure that you're going with the trend. Okay, the problem with trend lines is many people are going to try and catch them, try to catch the reversal. So for example, we have bullish momentum, ongoing bullish momentum, and then people start looking for sells right here, and that's the problem. Trend line breakout is not a reversal pattern on its own. Okay, so whatever you do, make sure that you have a trend on the higher time frame, and on the lower time frame, the way I do it is I look for these pullbacks, and if I find myself an ABCD pattern inside these pullbacks, this is where I'm trying to go with the higher time frame momentum. Okay, same thing for the sells. You have bearish trend developing, then you go ahead and look for pullbacks, and once those pullbacks appear, if you have the pattern that you're looking for, if you get the divergence, go ahead and sell by all means. So that's pretty much all. I do invite you to join us at the Traders Academy Club for the absolutely ultimate trading experience. Of course, don't forget to subscribe and like this video if you enjoyed it, and also Telegram group. We have an amazing Telegram group where we're sharing on daily basis trading setups and ideas. It's absolutely free, so you can enjoy that as well. That would be all. Thank you for watching.